Yes, thank you.
Hello, hello,
Treat
hello.
us well, please.
Good day, Sir Steve.
Hello, Jamie. How are you?
Well, I'm doing pretty good. Doing pretty good.
Pretty good for a little evening concert last night that we attended. We didn't get our regular night's sleep. I think we're doing pretty good.
Yes, yes. Just we had to go do a little old school rock and roll and see Mr. Joel Walsh, and it was quite enjoyable.
Yep.
Um, so today we've got some cool stuff laid out for you guys. I want to thank everybody for taking time out of their busy day to attend. Today is Thursday, May 19th, and before we get rolling here, just want to do a little bit of the legal speak. Just want to make sure that everybody knows Trade Ideas is a publisher, so you understand that no content published as part of the Trade Ideas trading services constitutes a recommendation that any particular investment, security, portfolio of securities, transaction, or investment strategy is suitable for any specific person. In other words, please don't misconstrue what we say here today as a solicitation to buy or sell anything, more importantly securities. If you do need advice of a registered investment professional, please seek one of those guys out. There are places to do that, and everything that we share with you here today is strictly for educational purposes. So, just want to leave this slide up here because once again, with what we're teaching you guys in these webinars, it's all based around the simplicity of the Trinity, all right? And there's one of my favorite dudes, Albert, and we've got one of my favorite quotes up there. If you can't explain it simply, you don't understand it well enough. And boy, that really rings true, especially when you're dealing with this thing that we call the market. So we've got our usual compulsory things on the board today. Going to throw in a little bit different of a mix as far as, of course, we're going to cover the Holly Trinity methodology, and then we're going to talk about how Holly did today. And then we're going to throw in some a little bit different spices down here. We're going to talk about what I like to term lag trading and playing some of these big gap reversals that we've seen pop up over the past couple of weeks or so. So without further ado, let us begin. And first off, as always, I'm going to bring our house technician, Steve Gomez, in. And he's going to give us a little recap, which is kind of looking like, here lately, we could just make a recording and just play it based on where the SPY is in its range.
Yes, the range of 204 was breached early this morning, but once again, the confoundry of the buyers stepping back in, throwing a monkey wrench into the short sellers' hopes and dreams, once again crushed the hopes and dreams of the short sellers as there was no follow-through below that little tipping line that Jamie drew below that other wick going back last month. It's a fair level to draw. But, once again, these bottoming wicks, they pop back into the market and they come back up. The Fed, did everything they could to try and throw the kitchen sink at the market yesterday, hinting at a new rate increase, but I try not to get too caught up in that verbiage and that fundamental stuff. We're only concerned with footprints in the sand and what the crowd reacts to and how what the crowd thinks of that news itself. It doesn't matter what we think, it matters what the crowd thinks. And it will do you good to have an open mind and being able to flip on a dime. There are many traders out there, and some of them quote-unquote professionals, like Bill Ackman, who just doesn't seem to understand how to throw in the towel and admit he's wrong. He'll just continue to pound the table and cry about why the position should be working in his favor but isn't. Not a good example to follow. You've got to have an open mind and be able to switch on a dime. So, the bears, again, would have loved to have seen us close below that orange line, that level of bidding and support that has been so prevalent over the last few weeks, couple months here. So we are still in no man's land. We bounced right back in. The goalie kicked the ball right back into play again. So there is no definitive direction. We're still range bound until that line is broken and closed below. Just a couple of ticks and trades below doesn't really do much. It's where it's closing that counts. So it's been what Dan Merkin likes to call very statistically noisy. It's been noisy for the traders, and it's been noisy for Holly. Holly's not had the best week. Today was a lot nicer, but it's been very statistically noisy. And the AI on Holly works when the markets are more statistically solid and clean, and things are working, not constant reversals and constant reversals, for lack of a better second word. Um, Gosh, I had a thought here, and it escaped me. What
Well,
am I
Steve,
missing here?
also too, all the people, Steve and I keep in touch with
That was it.
numerous.
That's what I was going to say. Thank you. Go ahead. You're going to say
Right.
exactly what I was
So I
going to
think
say.
we're, telepathy there.
It's been a rough
Um,
week for everybody.
I've spoken to at least half a dozen traders that have been in the business as long as I have. Some are in New York, some are here, some are in Arizona. Doesn't matter. We're all doing the same thing. But the consensus is that there is a lot of noise. Looking at my Twitter stream today from those traders, it's like, well, not seeing a whole lot today, keeping my chips for better odds. I'm, keeping my powder dry for better opportunities. That seems to be the ongoing theme here. So it's a treacherous market. We're not having long running trends. We're having flash micro trends, right? A schizophrenic market, in other words.
Yes. And while we're on that topic, price lists. You have something to, we've been working with our price lists, our price alerts, excuse me, cleaning them out regularly, trying to continue to enter new, fresh triggers and trade ideas, bringing them to our attention, which is part of the Trinity that was mentioned earlier, and we'll touch on that more. But those price alerts have been tough to get our hands around. I think you mentioned to me earlier, Jamie, that mine are barely positive for the week. I've had a couple of good ones, a couple of bad ones. What's weird is, for the most part, the shorts are working. But I thought you had a decent comment on the price alerts as well.
As you can see here,
Yeah.
Steve and I were just discussing this before the webinar started. I was attempting to share some stuff earlier, and instead of share it, I deleted it. But had I not deleted this list of price alerts, what you would have seen is an equal smattering of longs and shorts. I can't say equal. It's probably about 75% short, 25% long. However, what you would have seen here is a big red 4.6, I think. So longs and shorts together since Monday, we're down 4 points. That is a testament to the statistical noise that we're talking about here, and the difficulty of trading these little squarely range-bound markets where, everything happens, but it happens at a lot faster rate. So the time that we have to make decisions is compressed, and that does not make things any easier. So, we're all seeing the same type of thing. Bottom line, lots of noise.
Yeah, and again, that price alert tool is doing its job, giving us feedback to the traders, and saying, hey, it's not easy out there. It's a bit of a grind right now, and we're hearing that from other traders. We're seeing that in some of the setups on our trade ideas windows that are not as populated as they used to be. So there's a lot of things going on that's kind of letting us know it's a little tricky right now. But we're going to fill up those price alerts with a few trades towards the end. And go ahead.
Yeah, we'll start filling it back up and keep on keeping on. So in a market that we just described, what do we have to do? Well, number one, we have to be a lot more selective. All right, there are times when you don't have to be near as selective, and there are times where you have to be very selective. And up in this range, and of course we are approaching June. Typically, historically, markets have been kind of tame in the summer. Of course, the past couple of summers have kind of shown us a different face. So once again, not in the prediction game. But if we do get in this range bound, who knows what range we'll be in going into the summer months, or if we'll break down or up. But let's say we do stay in this little channel right here between, let's just call it slightly above 210 and a little bit below 205. If we do stay in that range, we'll have more days like today. So when the market is this fickle, we have to get a lot more selective. So as always, we're going to watch Holly, and we're going to key off of her. We're not going to get into her just yet. What I'd like to do is bring up some of the windows that we have been using for a very long time. So in a market of this nature, what I've been doing and found very effective, which I'm going to demonstrate now, is using a top list. And some of you may have heard about, may remember this. Some of you may have never been exposed to this type of technique. But if I pull my little cheat sheet back over here, lag trading. That's what we're going to talk about real quick here. So you may ask yourself, well, what in the world is lag trading? And I'm going to do my best here to explain it to you. So we're just going to get our daily, our intraday queued up here. And then we're going to go to one of my good old standby windows. Some of you might actually be watching this window. Before we get in here, let me just check and make sure. I want to have it on about 400 stocks so we have some stuff to look at. And of course, this is what the list looked like at the close. But we're not interested in what the list looked like at the close. What we want to do is this. So, and we're going to go back in time here. We watch the open. The SPY comes down here, does its thing. It takes a low, pops back up, hits a low for the second time, hits a low for the third time. So if we're watching, which all of us were, then after the third time, and then we see this little bounce back up here, and let's not even use this bar. Let's go ahead and use this bar because most people are going to be like, okay, 1, 2, 3. Tried 3 times to go lower, didn't. The volume levels just weren't there. So, okay, we're back up here, and this is right at 9 o'clock in my time zone. So we're looking at noon in East Coast time. So we're sitting here and we're thinking to ourselves, it's been slow going today. I'm not really getting anywhere. Treading water, basically. Maybe I'm slightly up or down or flat after commissions. So you're having to ask yourself, well, is it even worth, putting more skin into the game at this point in time? So you're thinking to yourself, well, the SPY's triple bottomed here on the short term, and I think that I don't think we're going to go any lower, but I'm not sure. But I know that the S&P, which is the head of the snake, has already moved up here. So how can I find stocks that are going to lag and catch up? Because the head moves, the body has to catch up. There will be some stocks in the body of the snake that are going to mimic this pattern. But how do we find them? Well, first we come over here, and of course we have to go back in time once again. So we go use historical data, 9 o'clock a.m., voila. Now the list is populated. So now we can go through here and start checking these things out. So obviously, the power in the top list is being able to resort this list of currently 400 stocks that are meeting my basic filter criteria. And just to show everybody, this is just basic filtering, trying to keep the really thin stuff, trying to keep the garbage out, right? Trying to keep my information stream, semi-clean. But really, the important thing here is being able to sort by these columns. So the SPY here, 9 o'clock. So what I have to do is I have to sort this list by all stocks that are not at their highs or close to their highs, but the opposite way. All the stocks that are at or close to their lows. So once I have this in front of me, I see these are my candidates right here, all these stocks that are either at or very close to their lows. So some of you might remember, but just to refresh everybody's memory or to enlighten someone who has not heard this, if we're trying to play a pattern continuation, then we want big grande volume pumping through that stock because that's going to improve our statistical odds that that stock is actually going to do what you think it's going to do. Now, if we're trying to play a bounce off the bottom, like so, we want to find the stocks where the volume is starting to dry up. So I would start scanning these time frames right here for volume because relative volume is a good indicator, but we can see high relative volume and then notice that the stock's volume has dried up now, right?
Yeah, can I add that the relative volume is cumulative from the opening bell? We're going to try and focus in on a small time frame going back 5 or 10 minutes now instead of the entire day, which relative volume focuses on, just to clarify that.
Absolutely. So I would start looking at where the volume is drying up on the 1 and the 5 and the 10 minute. So I'm looking at ALK, and just to refresh everyone's memory, in any of these time frames for volume, 100 is normal because that's 100%, and these are all percentage filters. So I look at ALK, I'm like, hey, below half of normal, 35% of normal, and 25% of normal. Okay, well, let's take a look. All right. Well, then here's 9 o'clock for ALK. Now, you know, if you had bought right here, then, it would have went against you a little tiny bit, right? But you can see what happened to it, the rest of the day. There was always going to be some opportunity to exit for a profit. Now, if you pull one of these up and you're just like, well, the volume has dried up, and I see this little wicking pattern right here, which gives me some comfort, we can always confer the oracle, which is the daily. So if we see it right here, we're like, well, it might get a little bit outside of these candles, but I think I'm pretty safe, putting a long on right here and hoping for that bounce. Now let's just move right along. Look how dried up the volume was in HPP. All right, 2% on the 1 minute, 32 and 40. Here is the 9 o'clock bar for HPP. And once again, whether you got it here and got out here, or whether you got it here and said, I'm going to stick with it as long as the market doesn't turn down, I'm going to hold this thing, then, look at what the thing did. Moving right along. Look how dried up the volume was on ZAGG. There's the 9 o'clock bar. I think everybody's starting to see a trend here in the stocks that I'm pulling up with the volume exhausted. TOL, one of the home builders. 9 o'clock bar right here. Same old song and dance. Maybe you bought it here and got out here. Maybe you bought it here and said, I'm using the low of the day as my exit. I think the bottom's been put in, and as long as the S&P doesn't go against me, I'm going to hold it. And of course, you can see the potential here. All right. So pay, same thing. Low volume numbers in all the time frame categories. Once again, there is the entry point, and there is what the stock did for the rest of the day. And we can just keep going here. PVTB. Boom. So you see, ladies and gentlemen, what I'm showing you here is uber simple. We don't need any RSIs. We don't need any MACDs. We don't need any slow Ks or percent Ks or any of that stuff. Now, if you do have studies on your charts, you might notice some coincidences, right? But for all practical reasons, we don't really need those things, as you can see here. All right, so PVTB, let's do a couple of more. I think I had CHRS on here. At that time, look, volume in the 1 minute period, big zeros over here, 27 and 29 respectively. Boy, that wouldn't have been too shabby, would it? Getting along in the 9 o'clock hour right there, and then whoosh. So, there is a theme here, and that is the volume is dried up, the market is turned, these are the laggers. You can catch the laggers if you know where to look. Once again, a perfect illustration of this is alpha, and it's hiding. But these columns right here help us find it.
Well, hey, Jamie, as I expected, some people want to have a copy of this link. If you can maybe drop a copy of the cloud into either the chat or the last question, and I'll just kind of re-summarize here what it is that Jamie just showed us. We had the spiders trying 3 times to make new fresh lows in the day, and then they clearly bounced back up with a nice green candle. Well, at that point, he's using the volume radar here to grab a giant sample of stocks and then sort them based on their position and range, quickly looking for the ones in the position and range that show close to low that haven't had a bounce yet, staying away from the ones that have higher than 100% volume, because the idea being they could continue and go lower and break through support. But in this case, when you have anemic, dying, waxing volume drying up at these critical support levels, again on the daily chart, there's really no other place to go than to run to the other end of the lifeboat for a little while until things change again. So, it's a great way to try and isolate the laggers rather than trying to chase things that have already moved.
Absolutely. And once again, the methodology is so simple, using basically the same concept, the Holly Trinity. Here's our information source, our top list, footprints in the sand here, and then whether you set a limit alert for it or just go ahead and make the entry. These are more make the entry now, right? That third part can be we either set the limit alert or we act on the trade, right? So, footprints in the sand, information source, act on the trade, or set a limit alert for it.
Mm-hmm.
Pretty simple stuff. So this last one was rare, and once again, you see what happened. Maybe it goes a few more pennies, but eventually it catches and snaps back up. And this is just 8 examples off of this list. We could probably keep going and going and going, but what you're going to see is the same old song and dance here. So these are low-risk trades as well, because typically the stock's already put in a bottom or a wick, and you can compare it to the daily as well, for more confirmation if you need to do so. But a lot of the times it's not even going to correspond here. Sometimes it will, sometimes it won't. But what the real powerful metric here is being able to tell that the volume is indeed drying up. And I don't care what charting package you're looking at, eSignal, Realtek, one some big broker dealer. But if you're trying to gauge volume on these volume bars down here, it's a pretty fruitless effort.
Yeah,
right?
relative to what, right? Relative to what? Volume bars don't really show you what it's relative to. They're just a visual.
Exactly. So this is just yet another way that we allow people to drill down and see more specific, more minute data. It's, to use the old adage of, most people look down and see the rug. Well, that's the market. And most people will never look at anything else other than the rug. But guess what? You pull the rug up, there's another layer. Most people aren't even aware that layer exists, much less are they going to act on the information that's swirling around in that layer. And guess what? There's not just 2 layers, there's 3 and 4 and 5. I mean, it's almost a limitless layering of layers, if you will. The better tools that we have to drill down into the deeper layers, the better off we're going to be. And a lot of the times it's simple, very simple stuff. People, we as humans, we like to complicate our lives, in one aspect or another. That's just what we do. That's another reason why this game is so difficult. There's a reason that there's a 95% washout rate, okay? So we're the cure for that, all right? We can help you make it in this business and at the same time make your life easier. And hey, who would like more stress levels? Not very many people. We want to keep our stress levels low. We want to keep sane during the market time. We want to do all of our homework. We want to know what to look for. And then on days like today, if the market's not giving, and say we go through this process and even these guys aren't giving, well then we know, hey, today's just not the day to be aggressive.
Hey,
Keep
and
my powder dry.
Yeah, and to add to that, you look up and you see Holly only made 8 trades. That's probably the lightest amount of trades that she's made in a month, as far as I know. So Leon was correct in pointing that out. It's just another piece of the puzzle that's showing us there's a lot of statistical noise out there right now. You couple that with some of what you're hearing on social media and from your friends and your other traders, and it all starts to kind of come together. And, of course, the price alerts being difficult to get to a more higher positive level. So
we'll drop this one in the chat. Now, everybody keep in mind here, this 1-minute column here does not come resident in a top list window, so we have to create a custom formula for you. You can always email info@trade-ideas.com, and either myself, Steve, or someone like Marissa can easily drop that 1-minute formula into your account via our back office. No problem. So, Steve, just remind me, and I'll drop those links in at the very end.
Okay, I'll do my best.
All right. Okay, so that's my little lesson on lag trading. And, of course, hey, you can do the same thing, but inversely if the market has made tops and come back down a little bit just by, looking at the stocks that are at or close to their highs where the volume dries up. It works both ways. All right, Steve.
Yes,
so
sir.
I think the next point of business, shall we talk about the MNRO today?
What's the MNRO? Refresh my memory what we were going to talk about on that one.
This guy.
Yeah,
Big, huge guy. and
Well,
then whoosh.
why don't we talk about the brief trades of Holly today and the new column that has been added to the developers version, which will be available here to you guys pretty soon.
Yeah,
And
let's
then,
go ahead and get Holly out of the way
yeah,
then.
and then there's a trade that we talked about, ONCE. I think that might be a good transition over to the MRO as well.
I believe you're right. Okay, so let's talk about how Miss Holly did today. So as we can see here, the strategy hopper, we had 4 shorts, 1, 2, 3, 4, and 6 longs. So 10 strategies, 4 shorts, 6 longs. Now we can see that only 4 strategies kicked out trades today. These guys at the top right here, all these other guys were zeroed out. So they made the team, but they didn't get the chance to play because the very specific conditions were not met. No big surprise there. So this little guy had, this little piggy went to market with 1 trade and made a whopping 4 cents. This guy was flat. This little piggy got none, right? And this little piggy kicked out 2 trades and was down 56 cents. So this little guy carried the water today. PB Short kicked out 4 trades, knocked out 2.23 points. Now let's take a look at the all trades plotter real quick, which I already have here. And we can look at the open to close. Once again, not a whole lot to look at here. And things kind of played out the way we hoped they would. Good news right here on Holly's closed P&L. She knocked out a $1.01. Had she not exited, it would have only been worth 40 cents at the close. Good news here, 70 versus 30. And then on LinkedIn, we might have a good trading round opportunity here. So let's take a look. All right. So here was Holly's, hold on, my eyes are playing tricks on me today. LinkedIn was a short, right? So here was the entry bar right here. Of course, Holly has. So entry price on the LinkedIn was 126.09, and we had a pretty hefty, when you're playing $126 stock, the smart stop recommendation was $1.14. Obviously, we did not get stopped out up here because we can see here it was a time stop. So an hour later, if we're looking at 7:20 here, 8:20 here, Holly gets out, locks in her whopping 26 cents. But as we always talk about, if you're in that trade, Holly's got to exit because that's what she's programmed to do. But then the time comes up and you're like, well, the trade's moving my way. I've got my risk in place. There's no reason to get out of this trade. And had you held it, you would have had additional exit opportunities for a much larger gain here. Obviously, holding to the close would have yielded 82 cents here. So, good trade around opportunity there, or a good hold option to actually make more than what Holly did on the trade. And this little guy right here, GPRE, a nice trade around opportunity as well. So we can see that Holly got in here, kind of at the top, and as we know, timing is everything. So just to kind of reiterate what we always say, the fact that GPRE got stopped out does not negate the fact that it was still a highly probable trade, statistically speaking. So once again, when we see this type of action, $15.95 was the entry price. We see Holly get stopped out. What should be second nature for you guys moving forward is to set a limit alert for long at that entry price. So had we done that, $15.95, and I'm not going to mark it because it would just auto trigger. So I'm just going to manually insert a line here. And we can see, once it gets stopped out, you set your limit alert, and whether you participated here or whether you participated here as it busted out again, is really not a big factor. But you can see Holly trade around what Holly, Holly took a bullet for us here, said, I got stopped out, set that second alert here, and, lots of alpha waiting in the second half of the day on GPRE.
Yeah, the AI never will re-enter the same strategy twice, but it gives us the opportunity to mark up some charts and look for levels that make sense for a possible 2.0 entry on our end. But she's on to the next trade and taking the hit, and we've got to stop the trade and mark it up at some point in time during the day, and the profit target is or the profit close profit, excuse me, is what's taken. The non-exit profits are up to the discretionary trader to keep an eye on, which is a perfect segue into ONCE, right?
Which was a before we skip on to ONCE, I just want to point out to everybody this new little column over here. Okay, now it's not going to be showing up on your version. We're running a developer's version, but it will be coming soon. So this is going to tell us what the percentage profit was, which has been a highly requested feature. We should have had it in there in the beginning, but hey, better late than never. It's coming. So this will tell you the percentage that you made on every trade. Or, good news here, we only lost a quarter here, 25 cents, but had we held that trade, we would have lost 2.45%, So pretty eye-opening statistics, and of course, we made $1.01, which equates to 1.32%. All right, so nice, even, action out of Holly. It was good to see her make 4 trades and win all of them today. We always like
same strategy, one direction.
Yeah, but just to reiterate, even when Holly's having a negative day, we can still win. So, trade arounds work. When the trades just work, that's great too. And it's all going to be a barometer for how fruitful the rest of the day has the potential to be. Okay, so let's move right along to this stock that Steve just pointed out, ONCE. Now, what is so special about ONCE other than the fact that it ran up towards the close and just gapped and went today? And that is, Steve, you want to tell them about the close yesterday?
Well, you have a stock that closed on high. That was a Holly trade. And you have Holly having to pull the ripcord and say, see ya, I can't take trade overnight, so I got to get out. And then you're looking at this trade saying, okay, this is closing on highs. Holly's getting out because she has to. I'm in the money. I like the way this chart looks on the daily chart. I have conviction. I have the ability to know I can manage some risk. I've got some points behind me. Why would I get out here? Why maybe I sell half, or maybe I keep it all and go forward. This is a classic example that we're bringing up that people talk about. Well, this looks like it's only something for day trading. Yes, and it's also something for longer term trading. MGT was picked up by Dan in 98 cents back last week, I believe, and he held it for 4 or 5 days, in real time in front of the live trading room, and he kind of called his shot. I even hashtagged him Babe Ruth for kind of pointing out to the right center field and then getting exactly the shot that he called. And so the point being here is, no, it does not have to be just for day trading. These are ideas that are generated and brought and served up to you. All over Trade Ideas Pro, but especially the Holly ones, are statistically probable. And again, she does not go home overnight. And we always say this is a gray box system. Great ideas are generated, but it really is up to you as to how you manage the trade. Sure, there are some suggested stop loss areas, and they should be very closely watched as well, because the smart stops that Holly employs are statistically viable as well, and they're there for a reason. But on a trade when it's going in the direction of the AI and the shot clock's expiring, I can't think of any reason here, looking at this particular chart, to get out. And so the answer is, you can hold on to these things as long as you like, as long as they make sense to you as a trader. If this did not look like a great chart, if it did not close on highs, then that's a whole different story. But let's look at the daily here. That's the first thing you want to do, is look left, pull the helicopter back, go up and see what the bigger picture is. This thing closed right on a trigger line. I mean, either a penny above or below. I can't tell. It's too close for comfort. Why would you want to sell this stock on the hopes or on the risk of missing out on a follow-through gap up of the shorts freaking out overnight and deciding to get out? And another thing, go back to, you can actually see it on either chart there. I talk about when you get a good move, you usually get like a day and a half. Well, I would consider that first day, day one, and I would consider the first half of today the half a day. It just seems like, and I'm just going on this is Steve Gomez's own observation over the years. When the move comes and you get that explosive move and the shorts capitulate and the buyers run in, it becomes a momentum stock. It seems like more often than not, a day and a half seems to be the rule of thumb to get the big meat of the move. Now, I'm not saying this thing might not regroup here and try again and continue to move higher, but if you're one of those people who wants to take a really good trade, and you got your 10% or whatever it is in this particular case, I don't know. But when I see a move like that, a day and a half is usually a reason to at least sell half and pat yourself on the back and say you caught a really nice move there. But again, day trading, swing trading, position trading, whatever you want to call it, the time frame is up to you. It's not set in stone, and this ONCE, I think, is a great example of that.
Yeah, and I'd like to make the point here how everything eventually comes full circle, because, Steve, this is the pattern that we always look for in the trend change lubricant. We actively hunt these patterns, and we wait and we wait and we wait and we wait for this to happen, right? But look what happened yesterday. Holly spits this out in the last hour because this was a power hour trade, correct?
Yes,
yeah.
I believe so.
So, okay, everybody's just kind of, staring at the screen yesterday, waiting to see if anything's going to get issued. ONCE hits the tape, hits the screens, and then we're like, okay, Holly makes what? How many pennies did she make on it? Was it under 20 cents? I can't remember right now off the top of my head.
I think
so.
But
then, Holly has to get out. But if you held it because there was no reason to get out, boom. By the time the close hit, it was up a point. Then what are you going to do? You're going to pull up your daily. You're going to go, holy mackerel, this thing just did what we always look for, and we were alerted to this pattern by something completely different. But now look. So once you see that, you're like, hey, I've accidentally stumbled into a trend change reversal here based on Holly's call in the last half hour. Everything comes back full circle. So you're already trained in recognizing this pattern. So, once you see that, you're like, I should probably hold this overnight, or at least get out a half and hold the other half, because look how nice this is. Look how nice the base camp is. I mean, it's popping out, and then boom.
It's so easy to beat yourself up for making the wrong decision on 100%. Sell 100 or keep 100. And either way, if it goes against you, you're going to kick yourself. But when you sell half, it's a lot easier. It's a lot easier on yourself. Why make it hard on yourself? This is hard enough.
Right, and see, it's a beautiful little synergistic system here, because everything repeats itself. And guess what, ladies and gentlemen? It's so wonderfully simple.
Yes, it is. And it is so simple that our CEO, Mr. Merkin, is coming back from Las Vegas, where he successfully did his 1 minute or 90-second pitch to the Shark Tank crew today, the casting call. Hopefully we'll get some more information when he gets back. But that's the whole point. We're trying to teach everybody. Take control of your own finances and use simplicity, and Trade Ideas is here to help. So were you going to add to that?
One more little example here of what something that I wanted to point out, and that is, going back to the channel bar for pre-market type stuff to try to figure out, once again, where's the action, right? So I want to point out this. Options. I just click on the options channel, right? So let's say we're looking here, shortly after the open. Typically, I like to wait about 30 minutes, right? So, the options, unusual options volume window.
Yep.
Here's kind of the methodology I was going through. All right. So let's go back in time and let's just see what was on the radar here after the first 30 minutes had passed. And then I see MNRO at the top of the list here. Okay. I'm doing divide by 100, 30 times normal options volume at that point in time. So now let's take a look at MNRO. So this is one of the most highly traded stocks today. Had some of the, not to say that it was the only stock that ripped up like this, because stocks are always doing that. Maybe sometimes there's a reason, maybe sometimes there's no reason. But looking at this huge gap down here today, of course, everybody, gaps are one of the more favorite things for people to look at for various reasons. Gap ups, gap downs. So Steve and I were looking at this one, and we're like, wow, when you see this kind of gap, and then you see this type of little tail here, and then just this rip, and at the same time doing crazy options volume, how could we develop a scanner that's going to point out things like this so that we're alerted to them in a, shortly after the market opens so that we can keep our eyes on this. So Steve and I put our heads together and we were kind of tossing the idea around, well, should it be a top list? Should it be an alert window? And we both came to the conclusion that probably be better done with a top list. So what I did here, and let me just remove a couple of these columns that aren't needed for this type of stuff, like we don't really need the 1 minute in there, or the consecutive days. And so what we did is we put together this list here. And so we'll give you a peek into our madness here of how we tried to articulate this into the system. So nothing crazy going on here, min-max pricing. Now, a lot of times it's these sleepier stocks that make these big moves, so we don't want to miss anything. So we just said, usually, if the stock trades 150,000 on the day, we'd like to see it. So then we added another filter here, another layer, position in the 15-minute range. It needs to be in the upper 50% because we don't want things that are, cycling down. We want things that are cycling up in the short term. So, as expected, not a whole lot of stocks doing this because the minimum gap down that we put on here, 7%. Usually there's not a whole lot of stocks doing that. Hey, which brings up a great little point that I can't resist here. If we ever want to know if we're over filtering, we have the -7 here after I hit the little show me icon, and we can see, gee, there were only 34 stocks today that gap down in excess of 7%. So this is always a great little tool to let you know if you're over filtering. I don't feel that we're over filtering here because we're hunting a pretty rare animal, right? So we can't expect there to be a whole lot of them, but we want to know when there's one in our forest, right? And of course, these are the other stocks that met that criteria. So the SSI didn't pan out so well, but we had another candidate here that if you were playing it off the bottoms here at that time, there's good opportunity for not quite a gap fill or retracement, but gaps down, takes a little bottom here, and then pushes back up.
Yeah.
So you never know what you're going to find with this little guy because each and every day is going to present a different opportunity, but it definitely might be something to keep an eye on moving forward, and I will drop this one into the chat link along with the volume radar as well.
All right. Why don't you do that now before we forget, you think?
You know what? That's a great idea.
We're going to have some price lists.
That is a great idea, so let me just do this. Number 1, click, click. This is the volume radar that you can use to lag trade, and this is the second one, which is entitled Big Gap Reversals. Okay, so those two bad boys have been deposited into the chat area. So, Steve, what's next? Are we going on to a couple of daily plays?
Charts. We've got some charts to mark up. Took a look at a few, the two of us together, to see if anything was worth repopulating Jamie's watch list and starting to fill it back up. So we found a few, and we'll discuss briefly what our thoughts are, and then after those price alerts are entered, we can collaborate and share with those that also have the same price alert feature. And which, by the way, I forgot to mention, the price alert feature is part of the premium Trade Ideas lifetime license, the way it's currently run up until the end of this month. The reason I say the end of this month is that it does appear now that we have a hard date in which the pricing is going to change. After a lot of demand, the pricing is going to be going to a more monthly type of setup, and most importantly, will allow people to come in and try the AI, the price alerts, and the back testing more on a monthly basis rather than having to go for the annual license. So, there is a hard date coming up. It's just been created and discussed behind the scenes. It looks like it's going to be May 31st, and Scott is going to talk a little bit more about the significance of that coming up here at the end after we do a few price alerts. The reason I brought that up is, again, it's going to be much easier for everybody to participate in sharing and collaborating in the price alerts that we set on some of these webinars, or I'm starting to see a lot of people on Twitter, which just excites me to no end, saying, hey, here's my price alerts for tomorrow, and they're putting the code out there, and anybody that has the code that can receive it and has that functionality can bring it in and use it. And this is just the beginning of what we think is going to be a really unique crowdsourced tool to help share some great ideas. So without that, the first one we'll do is WFM, Whole Foods Market, and you've got it up, and you've got it pretty simply defined there. We're always looking for pivot levels. This, again, was taken off the old trend change lubricant, which hasn't had as many setups as it was recently, but it's been a good scanner to go to the well with, and has been doing decently in our price alerts with the feedback we're getting. As these things trigger, they continue to move on with positive results. So we're going to try a few of these here again today. So we'll just go ahead and where are we going to put this one?
30, you want to do at the top of this wick?
Yeah, just at the top of that wick. Yep, top
of that wick. So that would be 3103 for the break. As always, we want to double check and make sure that we're not using the wrong direction. So if the price of WFMI rises to 3103, we want to go long. This is a trend change lubricant daily pattern.
If I recall, the short float is really nothing to write home about. We always try and check the short float. I think anything above 15 or even 20 is going to be very interesting. The short float on this one, WFM, right now is only 12, so probably not worth mentioning. I would have popped it in there if it was like 25 or 30. That's the kind of thing you'd put in your notes. So when it does pop up at you in real time and serves you a real-time trade idea, you have all the information you need that got you excited about it in the first place when you set these alerts. So we'll hold off on the short float at 12.7. That's not really anything to write home about.
Very true. Okay, I believe next on the list is cyber.
Yeah, very similar to the last one we just looked at. There's two schools of thought here. We could go through today's high, or we could just go through the high that's just above it, and I think that's probably the way to go. There's always the opportunity to try and get an early head start, but in this case, I think let's just tag the level that makes the most sense, which is that
42.98.
Yeah, that top one.
Right. If it rises.
And again, that's also off the trend change lubricant, but there's really no short issue going on there. And there was really only one more, which isn't worth looking at, so we'll pass and move to the next list. I believe was ZAG. You pulled this one up. You showed me this one.
Right, that was the one off the lag trading, wasn't it?
Mm-hmm. So what I like about this one is this can be a contrarian type. Yeah, it's an ugly chart. I'm not saying this is something to be invested in and put your kids in college, but this could be an interesting bounce here. I like the 5 or 6 days of red candles closing on lows each day, and then today we finally got a kind of a bottoming tail and a bit of a green body. I'd like to see a little bit less of a wick on the upside, but this is enough to work with, so I think we'll just use the high of today as a trigger for tomorrow to see if we can get a bounce out of this. Now, these types of stocks, they're down for a reason, but a relief bounce is probably due, and these are the kind of plays that can be good for a half a day or even a day, and try and get a good intraday movement, maybe catch a good piece of a green candle, but don't get too married to these things. They're in a downtrend for a reason, but yes, thank you, dead cat type bounce.
Yes.
Probably due for one, and we're going to have another setup, I think, that looks similar to that, and or two. The next one is AES. Trying to recall. Okay, so now we're getting into the bullish engulfing type stuff, and this is one of two setups that I want to talk a little bit about. You've heard me talk about trying to be contrarian. Look at what happened when the first two green bars there about 8 or 9 days ago bounced up. If you were the guy chasing those second green bars, look at what eventually is ready to happen to you if there's no follow through. So if you're setting your price alerts up there at those levels, you're just setting yourself up for a pretty quick reversal. So when I talk about looking for contrarian entries, I'm talking about watching these charts and looking for an area where you say, oh boy, it looks like those guys just got their stops run there after 5 or 6 days. Nice bottoming tail, nice green candle with not a lot of an upside wick. I think this one also, like the last one, deserves a look for a possible trade above today, and maybe just a single intraday trade or no more than a day or two at the most, because we're just trying to look for the breath of the market, breathing in, breathing out, and not jumping in on an in-breath when there's nowhere else to go, but finding that out-breath of exhaustion where it makes sense, where all those people were probably stopped out that bottoming tail today, and flip that around and use these for entries. Ideally, they're better if you can see these at the close, going into the close, but just as good, we'll set the alert for tomorrow. These may trigger right on the open tomorrow. I would not be surprised. But again, that doesn't look right.
Oops, I did it wrong. Hold on.
Yeah.
Delete. Okay, so we said the high of this bar, correct?
I want to do the high of that candle. Yeah, the high at the top.
Okay, that is 1077, so I input the wrong price. So 1078 is what we'd want to use, right?
Yep. And we want to code it for a long.
Yep.
For some, oh, you had it short because it was below the close.
Yeah. Okay, there we go. All right.
Okay,
Voila.
next. All right, J.W. Nordstrom. I've watched this one closely. I've watched a lot of people. I haven't touched it once, but I've watched a lot of people try and touch this thing the day after earnings, and they're just getting constantly slammed and constantly slammed. Just a quick thought on that. That first day after earnings, you really, in my opinion, I never try and buy it. It's a rule. The first day after earnings, let the bad news wash out. You got people coming to their desks. They had no idea there was bad news. The sell orders go in. It seems like it takes a few days to really wash out the bad news of a bad earnings report on a bad gap down. Very rarely do I see them pop right back up. You know, it happens, but it's not the norm. This is more the norm here to see J.W. Nordstrom try and frustrate the longs for a few days and then finally wash out the people that have had it with sitting in the stock after the earnings that just can't find a bounce. But looking at the footprints in the sand, which is what the charts are, I see a possibility for a reversal here. And I think this one deserves a head start, not going above yesterday's candle, but above today's candle. And
Okay.
if we can break above today's candle's high on tomorrow, I think there could be a day or day and a half of run in there. We'll see. But again, I want to reemphasize the reason Nordstrom gapped down was very disappointing earnings, and it's very difficult to come in that very next day and start going against the grain and against the current and thinking you're going to buy a bounce. There are people all day long who are pressing, changing, rearranging their portfolios and their models, the retail people getting in, realizing they're in a bad trade, they want out. It just takes a few days to wash out that negative sentiment. And so now I'm starting to see the footprints in the sand show me that that might now be behind it. 3 or 4 days is behind us. Let's see if we can get a little dead cat bounce here. And the last one is Grubhub.
Ah, the old grub.
And again, this is going to be very similar to what I mentioned earlier. And this is even more of a tighter example of a stop loss. When you're long a stock like this, you look at this thing and one, I feel bad for the people that held on those last 3 days, but you can see, oh boy, I better put my stop below this level. This is the most obvious level where the buyer stepped in, where the orange line is. And then you have a nice washout of a stop hunt and then a recovery on a tail right back up to the scene of the crime and closed right there back at that pivot level that broke down. Again, I think this is worth looking for the high of today for a possible bounce. Again, when I'm saying look for those contrarian entries, people, look for the entries where somebody else got stopped out and washed out and use that to your advantage and play off of their pain. And this is that type of example right here. And so we're going to go ahead and mark this one up and see if we can get maybe a day or two bounce out of it if it triggers.
And there we go.
All right.
That's so funny. It doesn't even look like a candle, just that little cross.
Yeah.
It's a cross wick.
When you got it right on top of it.
Mm-hmm.
Well, quick response to a quick question. What do you think of EROS? Let's go ahead and put that up because it dovetails to exactly what we're talking about. And this is for you, Leon. What do you think about EROS on this pullback, Steve? I think I like it because I think you've found a good washout with that bottoming tail. You might be wise to put a price alert above the high of today's wick and see if you can get a
1371, basically.
Yes, thank you. If you can get a reorganization of the base camp there to make a higher low and put it in. So that's exactly what I'm talking about, Leon. Not being the guy that bought that green candle on the top wick, only to be just turned around and wiped back out. And this is normal action for a trend. A trend goes up, 3 steps forward and 2 steps back, digs in on the trend line, and moves higher. But if you move your cursor again, and then you see that type of bottoming tail that we have on this particular daily candle, move your cursor there real quick, Jamie, so they can see that.
Sure.
Yeah. That type of action into the close is exactly what I'd want to see. That looks like a complete washout after 5 or 6 days of giving back that move. So I think it's a decent entry. It's a good start there.
Mm-hmm.
All right. Larry, that's all we really had for today, looking for some toppers that are ready for reversal. I've got a bearish engulfing alert that I use. I'll go ahead and drop that in here on response to your question, Larry, and you can take a look at that and use the cloud feature, and anybody else that cares to can look at that as well. Let me just grab my bearish engulfing here on my screen. Save to my clipboard, and I'll go ahead and respond to you. Oh, you've already got it? Okay. I'll put it in there anyway for anybody else that doesn't have it. But I didn't really see anything that I liked. A lot of those seem to have already had a lot of run to the downside, so maybe next week we'll find something that looks a little bit better. All right, Jamie, were you able to dump in your price alerts?
I'm going to do that right now. Make sure I don't hit delete instead of share.
You can see how easy to do. Delete and share.
They're too close to they're too close to each other.
If you're in a hurry, you'll do the wrong one.
Yeah. Okie dokie. Now here it is. All right, that one should be in there now. And I think we're about 2 minutes away from the top of the hour, so Mr. Scott, if you're ready to come in and talk about some of the pricing plans, we're ready for you.
Yeah, sure. We actually have something pretty exciting coming up. As we've mentioned earlier in the webinar, we have a hard date now for a pricing change. So first of all, that's going to be June 1st, so the last day of the current pricing will be May 31st. So the current pricing that you see in front of you right now, and actually, if you also direct your attention to your GoToWebinar interface, there's a handouts panel, and I have a PDF there for you to download that has today's specials as well as information about the slides that have the information about the new pricing and the current pricing. So Trade Ideas right now is $99 a month for the core plan, which is the everything without the AI or the odds maker price alerts. It includes all the real-time data and your exchange fees, the charting, a really great one-on-one training with either Steve or Jamie. Just go ahead and go to support, click on training, and then sign up using the handy little calendar app that we have installed there. Really great way to get a head start as soon as you sign up for Trade Ideas. Naturally, the annual plan costs less overall compared to the monthly. That's the idea, and it's $888 per year. Both are recurring with no contract, and it includes all the same great stuff the monthly does. Now, here's the important kind of thing here is the AI channel. This is the way we also sold the odds maker before we released the AI because they have the same back-end permissioning. It is an $1,100 one-time license cost, and this is good until the end of the month. And it lets you get full access to Holly, the price alerts, the backtesting module, so you can find trades that are performing in the market right now using the AI. You can take your own strategies and backtest them and optimize them yourself, all without any kind of programming, and you can do this against the entire universe of stocks or your own basket or whatever you choose to. So now the next slide shows what we're moving into. So when you wake up in the morning on June 1st, here's what our pricing will look like. It's going to be the same basic subscription plans, and that gets you the regular Trade Ideas Pro, which is $99 a month and $888 a year, exactly as we've already talked about, and it's very familiar to everyone. Now, the new thing is that we're doing away with that one-time lifetime license for the AI and the odds maker and the price alerts, and it's just going to be Trade Ideas Premium. So we have regular Trade Ideas and Trade Ideas Premium, and Premium is $188 a month, and this starts on June 1st, or $1,888 per year. So if you can do the math in your head, you can already see that if you buy the lifetime AI odds maker license before this change is over, you won't have as expensive of a yearly subscription to make. So it'll be $1,888 per year moving forward, whereas now you can get us for $1,988 total for purchasing your first year plus the AI Strategies odds maker license, and then it renews at $888 rather than $1,888. I promise you, once we do this changeover, it will no longer be confusing, but it will be slightly until this happens. the gist of it is now is a great time to get the AI license, so you don't have to be paying for it monthly or yearly. It's just yours forever. Now, if you're already a subscriber or you already have a subscription before that price change date, and then you want to purchase the AI strategies for the 1100 lifetime, we are going to allow that. So we are going to grandfather in existing subscribers. But new subscribers coming on board are going to be presented with the basic TI or premium TI, and it's just much more simple for everyone, but it will be more expensive. So if you have any questions about that, email us info@trade-ideas.com. Now we also have a combo page up so you can get everything at once. And you can, first of all, yeah, that's right. I want to thank you for coming by giving you a subscription special. So use that code you see on your screen, Holly18, exactly as you see it, all caps, HOLLY 18. That's good. And that's good through the end of Friday this week, and that lets you get the first month for just $49. There's no reason not to give us a try for that, and that also includes the training and the charting and all that good stuff. And then you can also use that code to get 30% off the lifetime AI oddsmaker license, so you get that for just $770, or get your first annual year. This is a great upgrade from the monthly for $710 the first year, and then renew at $888. Really great pricing. And here's what I was going to talk about, the combination link. So if you go to bit.ly/capital AI Holly, and those are caps for the AI Holly, or just click through your PDF, that takes you to a page where we've made it easy to get both the AI and the year together for $1,988. But with the application of that Holly 18 code on checkout, it takes over $500 off immediately. So you get out at just $1,488, and then it renews at only $888 per year, rather than what the upcoming TI Premium annual plan will be $1,888 per year. So this is a really great time before we go ahead and do this changeover after Memorial Day. So right after Memorial Day weekend is over, we are changing this, and well, now's the time to move on it. We've been talking about it for a couple of weeks now. If you have any questions at all, hit us up at info@trade-ideas.com, or shoot Steve an email. He's steve@trade-ideas.com, or Jamie, jhodge@trade-ideas.com. Or you can contact us on chat or anything. Thanks all for attending. There'll be a recording up of this sometime tonight, or at least by tomorrow morning for sure. Thanks everyone for attending. Thanks Steve. Thanks Jamie. Good show today. We'll see you on Monday.
See you next week.
Yeah. Thanks for attending everyone. Have a great weekend.
Yeah. Cheers all.